Welcome back, folks, once again to TalkinStocks, where we interview top public company executives to give us some insight on where they are today and what the future may hold. I'm your co-host, George, with a J, and without further ado, the man that wears sunglasses to take his passport picture, your host, Dan the Stockman. Dan, are you there?
Oh, man.
How are you feeling today, Cook?
Undeserving and uncalled for. No, we were just saying 9 cents a share, 10 million market cap, trading 50,000 shares a day. The stock looks like it's just dead. I mean, you would think that this is a business that's just nothing to see here, just move along. But, hey, we got another month. Just today, the new news, Wildpack sets new monthly records for confirmed customer orders and can filling, brokering, so the various aspects of the business, everything. When we talked last, we were saying, let's see it let's string 3-4 months together, and that's exactly what they've done. So that's the way I see it. Just not translating into price improvement yet.
Just yet. So we had some news today.
Yeah, just our monthly update, kind of as we talked about on the earnings call, utilization is starting to climb as the new sales team is, executing against filling up capacity in key areas. We're in the midst of that crawl up.
Those guys you brought on, how's that working?
Oh, EHP?
Yeah.
Yeah, no, it's great.
Yeah?
I mean, they're, from a bunch of different angles, they're very helpful. Obviously, anybody who's the sole owner of $1 billion company is a good guy to have around and ask questions of. They have a massive amount of demand for their product as their win retail space. So, fruitful relationship on both sides.
Since you brought up the EHP, is this a launch, Mitch? Had they already been in the U.S.? That would be like a third of your business for next year.
It's a big amount. So, because again, the U.S. market's not entirely proven, but they've been selling here, so it's not like they're breaking in or anything. But interestingly, a lot of what we're producing is actually being put on boats and being shipped back to Australia. A company of that size, with that much market reach in so many different sectors that are kind of just on the periphery of beverage, we're very confident in what they've kind of committed to do with us. And obviously, is putting up, some of his own money and joining the board is, a really good indication that viewing it as the partnership that we are. So
it's a big order, right?
It's massive. I mean, again, I'm not gonna pretend that I understand how the stock market works. I'm not sure that.
Me neither.
I'm not sure that
I don't think all of us do.
It's as believable as any other order we've ever gotten. So it's just a matter of for us executing against it.
Yeah. Another thing that seemed new to me on this monthly update is that you put a dollar amount on the total orders. Was there some thought process behind that? I don't recall seeing that before.
Yeah, so we started putting confirmed sales orders, which are, confirmed orders is essentially, all of the purchase orders that we receive from customers in a month. Because obviously, like, what our sales team does has a bit of a delay before it flows through and becomes revenue on the income statement. So we wanted to show the build of sales. Don't quote me on the numbers because I don't remember them exactly. We've almost tripled monthly sales so that people can see the march up. I think it was, 5.5 million.
Well, all I can think is that people think you guys are going to go bankrupt. I mean, in the way I think of it, sure, so you had this $1 million investment from your new biggest customer. He joins the board. So in a sense, if people look at it simply, they can say, hey, here's a chance to buy at a 50% discount to what this smart guy did. But then if your company's growing, there's always going to be money available, right? If you were going in reverse, you could say, okay, yeah, this company's not growing. Maybe there's not going to be capital available, but it's the opposite.
Where cash is getting expensive, it's definitely something people should always think about. We think about it all the time, but to your point, I think we've done a good job historically of making sure that we're properly capitalized to execute on our strategy.
I'm a simple man. At least I like to think of myself as a simple man. You made this acquisition, right? Land and Sea. Did you guys just really pay way too much for that? I mean, that's even like twice what your whole business is valued at.
You're in a massive positive delta as far as what you acquired. Yeah, you know, when looked at in a really short time vacuum, people look at it and go, well, you're trading at a third of what you paid for Land and Sea. Well, that has more to do with, you know, what our shares are being traded at versus the actual, you know, inherent value of the two things. So, yeah, to answer your question, no, I don't think we overpaid.
Well, that's where it's an interesting moment in time because public market valuations are so much lower than private equity valuations. So the real deals to be had are in the public equity side. You put out a release on Woodstream and how this company's taking a plastic product, aluminum.
The lengths that people are going to, you know, adhere to kind of the new societal norms related to ESG. You know what I mean? And they're out there and they have a whole team dedicated to seeking and sourcing, you know, environmentally sustainable solutions. You know, the view that people are taking on, you know, packaging types, you know, not to mention they're going to be, you know, one of our largest customers, frankly. You know,
it'd be good. Have you put out any images of what this product looks like yet? Or, I mean,
yeah, no, we've run a bunch of it. It's on the shelves of Home Depot and Rona. It's actually cool. The Woodstream, they call it like Perky Pet is the kind of like product name, which I think is, you know, funny. And they've done a really good job with it. It's, you know, you've taken something that was, you know, frankly, a little bit old and boring and dated, and you've kind of revamped it. And I think that it's a really, really cool opportunity. The CEO over there, for, you know, running a business like that is very innovative, which is, you know, really cool to see.
Yeah, I listened to another talk you did, which they asked you a good question of how you would build a beverage brand, giving your insight into the industry and how you really should just tackle one city at a time to start. That was a good question.
It's interesting, right? We're so uniquely positioned to learn about what success looks like on the brand side, because, you know, at the end of the day, we were just looking at these numbers. You know, we have over 1,200 customers now, up from, you know, 300 or 400 2 years ago. You know, we've been fortunate to see some brands go from, you know, two guys in the garage coming up with a goofy idea to sold to Diageo or some huge, maybe not Diageo, but, you know, some huge conglomerate for many, many, many millions. And it's so interesting because the successful ones all typically follow like a very similar pattern. And it's just, for me, it's like the correlation of success in the beverage industry. There's a few really, really strong correlates that are massively important. And, you know, out of the, again, 1,200-ish customers that we service today, you only see like 30 or 40 of them doing it.
You'll see some things that are like consistent, you know, success and failure, right?
For sure, yeah, no, it's super intriguing. So, you know, we obviously try to take a bit of a consultative approach.
Tried and true method, but
yeah, people
what else?
People want to believe there's some, like, you know, there's some unproven thing out there, and don't get me wrong, there definitely is. There's always better ways to do things, but you know, in industries like these, you know, looking at the data and figuring out what the strong pathways are, you know, it's not all that complicated.